morning, world, and welcome back to Financial Funnies, your daily global and crypto wrap with Hackers Corner on deck. We've got a stacked lineup today. Fed rate cut bets, gold's new record, XRP ETF hopes, Solana's merge upgrade, and hackers sneaking in through job interviews. First up, the US economy. August jobs data came in weak, just 22,000 new jobs. That's triggered a wave of speculation. Markets now price a 90% chance that's the Fed cut rates this month. For Main Street, weak jobs growth means real pain. For Wall Street, it means cheap money. Already, Bitcoin and Solana are pushing higher as liquidity hopes rise. And big money is playing. Strategy just scooped up 1,955 BTC worth $217 million. The outlook, Morgan Stanley now expects the Fed to start quarterly cuts in September and to keep cutting until 2026, bringing rates down to 2.753%. That's a green light for risk assets. Rate cuts might rescue markets, but they won't magically fix a sluggish labour force. Still, investors don't seem to care. Liquidity is king. Next up, the UK. In London, the Lord Mayor is on an investor roadshow pitching the UK as a hub Asian capital, especially from Vietnam. The focus, asset management and sustainable finance. At the same time, silver ETFs in the UK are booming as prices touch a 14-year high. The outlook, Britain's economy needs global investment and courting Asia makes sense with trade ties shifting. The UK is trying to sell itself as a safe haven for global cash, but post-Brexit, uncertainty still lingers. Moving on over to Europe, where the ECB faces a tough balancing act. The European Central Bank meets this week. Analysts expect no rate change. Inflation remains sticky while growth is weakening. Expect the ECB to hold steady, but the pressure to cut will build if the Fed leads the way. Europe's always the slower mover in global monetary policy, but this time waiting too long could push the bloc into deeper stagnation. Coming up, BRICS bloc tensions are rising. BRICS members are pushing back against US tariffs. India and Brazil are vocal, while China and Russia call for unity against hegemonism. Meanwhile, India posted a record $99 billion trade deficit with China, even as its trade with Russia surged thanks to oil import. Expect BRICS to push harder for local currency settlements, chipping away at the dollar dominance. India shouting at the US while quietly deepening trade with China and Russia shows the tightrope emerging economies are walking. Let's zoom into some emerging markets, starting with Zimbabwe. The Reserve Bank is enforcing a mono-currency regime to stabilize the economy. Early signs are promising. July's trade deficit shrank by 94.5%. If Zimbabwe sticks to this, it could stabilize inflation. But history shows monocurrency pushes are harder to sustain without foreign trust. It's a brave gamble, but in Zimbabwe, bold experiments are often the only path forward. Over to Iraq. Iraq reported a 7.5 trillion dinar budget deficit in the first half of 2025. Oil shortfalls and heavy spending drove the gap, but Iraq also confirmed that OPEC Plus will boost output in October, easing global supply worries. The outlook, the deficit could widen if oil prices slip, but OPEC Plus output may stabilize revenues and ease inflation worldwide. Iraq's challenge is simple: oil dependency. Until it diversifies, deficits will be a reoccurring headline. Next stop, Vietnam. The World Bank has cut Vietnam's GDP forecast to 6.6%, Tariffs are slowing, exports are biting. The country's financial system also relies too heavily on banks, with stocks and insurance markets undeveloped. Unless exports recover, growth will remain below potential. Financial reforms are overdue. Vietnam is still a growth story, but it's fragile, too dependent on global demand. To North America, Canada next. Canada's TSX broke its winning streak after MDA Space collapsed 25%, losing a $1.3 billion contract. Weak jobs data also boosted expectations for a Bank of Canada cut. Canada may mirror the Fed with cuts, especially if jobs keep weakening. Canada is being pulled by global ties. It rarely sets them. Moving to Australia, Anne's Bank is cutting 3,500 jobs, taking a $369 million hit to restructure. Meanwhile, consumer confidence slid 3.1% in September. The outlook: Australia's economy is slowing, pressured by China demand's slump. Cutting jobs is ugly, but banks are bracing for leaner times. The real story is consumer sentiment. Aussies are nervous, and that matters. Now, the spotlight on commodities and crypto. Gold smashed a record at $3,651 per ounce. Goldman even warned $5,000 gold if Fed independence is threatened. The outlook: rate cuts plus geopolitical risk equals gold's fuel. My opinion: forget Bitcoin. Gold just proved it's still the king of hedges. This is not financial advice. Silver's trading at $41 an ounce, up 43% year to date. Saudi Arabia just bought $40 million in ETFs. Silver is in demand both as a precious metal and an industrial input. Silver's underdog story is finally paying off. Next to the crypto corner, Bitcoin dipped hard from 124,000 to 107,000, back over 110,000. Think of it as your mate falling off a bar stool and climbing right back up. Gemini AI insists long term is still bullish. Ethereum hit 4,950, dragged Pepe and Alt up for a weekend rave, then cooled off. ETH remains the DJ, keeping the lights on. XRP is up 400% this year, beat the SEC, got a MasterCard, and ETF odds at 85%. Conservative $4, ambitious $10. Solana trading above $200. Alpenglow upgrade cuts block time to 150 ms, faster than you deciding to order fries. Clears $285 and $400 in sight. Meme coins: Pepe clings to support Maxi Doge, raised $1.8 million in pre-sale, hyped as a 1000x play, with staking yields at 171%. Basically, the circus clowns keep the show alive. Bitcoin staggering, ETH DJing, XRP's running for prom queen, Solana's building bullet trains, and the meme coins are still the clowns in the tent. And now back to serious business with Hackers Corner. Ledger update: attack wallets tracked. Hacker stole only, drumroll, $66. Ledger patched it, no wallets compromised. Ledger's back in business. The outlook: confidence restored, but supply chain risks remain. This was more bark than bite. Ledger users can breathe. Grab a Ledger stick, guys, and keep your crypto safe. The link's in the description below. Moving on, Swissborg hack: exchange lost 192,600 Solana. That's $41 million. Centralized exchanges remain prime targets. If it's not your keys, it's not your coins. Kazakhstan Bitcoin reserve: president orders creation of a BTC reserve. Could spark copycats in emerging markets. From gold to Bitcoin, central banks are diversifying faster than expected. So today we learned gold's flexing, Trump has a coin, hackers are applying for jobs, and Kurdistan is stacking sats. Bitcoin stumbling like it's on a bar crawl, Ethereum's DJing the party, XRP's running for prom queen, and the meme coins, well, they're still the circus clowns. Honestly, it's getting harder to tell CNBC from the late night comedy show. The rates are falling, fueling gold, silver and crypto. Emerging markets are struggling, but some, like Zimbabwe and Iraq, show resilience. And just take note, no RV this week, next week or the week after. They're still trying to put their shit together, guys. Hackers are more creative than ever, but defenders are catching up. We're in a world where money, politics and code are colliding, and nobody really knows who's in control. Well, we do, but we don't. The Fed cuts likely, gold at records high, XRP ETF hopes alive, Solana building faster than rails, hackers going stealth with deepfakes plus supply chain attacks. And that's your wrap up for today. Global markets, crypto chaos, financial funnies and hackers corner, all in one go. If you want extra details, the warnings before they hit the headlines, check out my Patreon. The link's in the description. You'll also get to watch the markets live, watch the Schumann Report live, and lots more news coming your way. Thanks for watching. I'll see you tomorrow. Same time, same chaos, but for now, bye bye.